Hi friends, Simit here from InformedTrades.com. Today's Wednesday, September 3rd, 2014. Time for our daily news and charts update. Switching up the format a little bit today. Going to start including some fundamental news stories that I think are important or that may impact the market, things for traders to consider, especially if they have a longer term perspective. Then we'll delve into the charts and the actual trades that I'm placing that are verified or posted. My trade history is posted on my blog, and the trades are verified by myfxbook.com. And of course, if any of this information, the fundamental or the technical part, you have questions about, we have our learning section on Informed Trades. Check that out. Share your knowledge. Ask questions. Really comprehensive learning section. We can all learn together. Okay, let's get started with, oh, what am I doing? Okay, let's start with a look at the news. One, the European Union is sort of discussing ongoing sanctions with Russia in terms of banning Europeans from buying Russian government bonds. If these sanctions go through, I don't think they'll be that significant. Russia does run a budget surplus, so they have their own. The Russian government itself has the capital needed to buy their own government bonds. So I think I don't really see the significance of this. It is getting a fair amount of attention in the media. I don't see the significance of this. And in terms of the relationship between Russia and the rest of the EU, because Russia really provides so much of the energy to the EU, natural gas pipelines, uranium enrichment for nuclear power, all of that, Russia really has a stranglehold on. So I think in terms of sanctions, Russia in a way has an upper hand. The energy card is really Russia's most powerful card. Really, what gives them such a big advantage, in my opinion. These sanctions, though, I don't think are going to be very meaningful, mainly because, as I noted, Russia has a budget surplus and is capable of buying bonds itself. Okay, another news story that's gotten a lot of attention, I think maybe worth noting at least. Spain sells first 50-year government bonds. I'm laughing because a 50-year maturity date. So if you invested 1,000, 10,000, a million, whatever, you'll get that principal back 50 years from now, and you get paid interest, every year. So at a rate of 4%. To me, I guess I'm a little surprised. It is interesting to see how long can this go on. Will people accept 100-year bonds? Will they accept 200, 1,000-year bonds? Will everything just be flow-based so that all people care about is having a monthly flow come in? That's something to think about. To me, I find it unlikely it's going to go on forever, although I also find I wouldn't have expected that 50-year government bonds would be well received, and there seems to be appetite for this. So that's interesting, and a lot of people who think the debt crisis is not going to end anytime soon or not going to come to a cataclysm anytime soon, this is an interesting point in favor of that argument, in my opinion. And if there's demand for 50-year bonds, that suggests there's demand for more and more debt, more and more bonds. So in that case, these governments can issue more and more debt, can spend more than they're earning in revenue, and if there's demand for it, this can go on as long as there is demand for it, I suppose. So when will someone say enough is enough? I don't know, but 50-year government bonds suggest that time is not now. Okay, so I just want to highlight those two news stories. Let's take a look at the charts. First up is gold. Oh, now we're at the gold chart. Okay, so we broke through the range and fell down to 1260. There is some support here, I suppose. You see this long wick candle on June 17th. Now today's candle looks like a bit of a looks like a doji pattern. So this is a really interesting candlestick pattern. Big down candle followed by a doji candle. So this looks like the market crashing into a support level. The market seems exhausted now. If we see a range form, this could be an interesting buying opportunity to come back up. This could be the beginning of an accumulation pattern in gold. But we'll see. The trend is now clearly bearish, at least from the daily chart perspective. We are below these trend lines. We are below the 50-cent moving average, below the 200 exponential moving average, below major support at 1280 and 1270. So a lot of bearish momentum here. We'll see if this ends up being a meaningful accumulation pattern. Of course, as I've noted, if we look at the monthly chart, not that dramatic. If we break 1180, then I think there's real cause for concern. I am surprised that we are lower than I thought July would be the low. So I am surprised by that. However, I still think it's good accumulating opportunity to buy if you plan on holding, or if you have the willingness to patience to hold for several years. I still think we're going to see new all-time highs in gold. I'm not sure if it's going to be 3, 4, 5, or now maybe 10 years. I kind of think it'll be less than 10, maybe 5 years, but we'll see. I haven't been so accurate in my longer-term estimates on gold here, but I think overall, directionally, or in terms of timing it, but I think directionally, it's been prudent to accumulate. If you bought in 2007, 2008, and you've been accumulating, chances are it's either worked out in your favor, or it hasn't been too bad if you've been steadily accumulating. So that's gold. Bitcoin, real quickly. Not much new to report here. Oh, well, this looks more and more like we're at support here. So another narrow candle. This looks like we could be headed up. Although, as I mentioned, I think shorting from this level here, 560, is a really good opportunity for traders. I have a binary outlook. I'm long at around 526. A small position, so I'm looking for a 10 times return for Bitcoin, that underlying protocol, to be used widely, or for it to go to zero, in which case I'll lose all of my small investment, and I'm prepared to do that if necessary. It's within my risk tolerance as the position is small. Okay, now on to the Forex trades. Euro Kiwi, I was short this pair, and I did move my stop to break even. Now, yesterday we had talked about how this candle here, this September 2nd candle, is a bullish engulfing candle. So I had said that maybe it's time for me to close it, take a small profit. Well, it ended up taking out my stop, but I moved my stop to break even, so I didn't lose any money on this trade. I just got stopped out of it. I'm no longer in this trade. I wouldn't really do anything differently. I did see this bullish engulfing, and that was a sign to take profits early. So maybe that's something to consider. However, as I noted, in general, I don't like to tinker too much with a trade once it's put on. So, I had already de-risked the trade. If I hadn't de-risked the trade, I probably would have moved my stop to break even as a way of, all right, let me make sure I don't at least lose money on this. So overall, I'm generally, obviously this is not the preferred outcome, but I'm content with the way I handle the trade, at least for now. We'll see in time, and with experience, maybe I'll develop a better approach. But for now, that's acceptable. So far, so good on that. Kiwi Yen. Now, this is also interesting because normally when you see two doji candles like this, that's a reversal, right? So especially if we're about to run into the 50 simple moving average, this could be headed back down. However, this trade has also been de-risked. It's currently in the money. I got long, 86.30. We're now at 87.26, so about 100 pips in the money. Similar situation. I'm not going to, even though we see a doji at resistance, I'm not going to take anything off. I suppose there's some rationale in taking half off. However, I'd rather just hold on. I've seen it work out where I have taken half off and the market's gone up, or I take a half off and it's come back down. In general, I still try to structure things where I have as large of a position to capture the bulk of the move as I can, while I'm still de-risking the trade. So this trade has been de-risked. I've removed the potential for me to lose money on this trade. So that's sort of, once I've done that, I don't want to tinker too much. This could be headed back down, though. Kiwi could be headed back down. So we'll see. So far, I'm just going to leave it as is. My target profit is all the way up here, 89.65, so still 200 pips to go. Dollar Canada, this is the third trade I have on at the moment. I am long Dollar Canada. A little bit of a down day today, and I think I'm going to de-risk this trade because we did close at resistance yesterday. So I'll move my stop up to 0846. My stop will go here. Hopefully I don't get stopped out, but we'll see. A little bit of a down day here so far, but that's sort of the one adjustment I'm making all my trading today. And one other currency pair that I looked at, I didn't trade, but I thought it was an interesting pattern, was dollar Singapore. We are running into a resistance level. This level has been established, here, June 18th, here, August 8th, a bunch here in mid-May. So well-established resistance level. Also, we have the 200 exponential moving average there, and we have a bit of a down day here. So some may think this is a good level to short at. Short at 25.22, put your stop at 25.58. I've even tried basically this exact same trade back here. Didn't get filled, but there's another chance to do it now. However, I don't want to put this trade on just because I'm not seeing enough signs of dollar weakness across the board. In fact, I'm seeing more signs of dollar strength. So, for instance, I'm long dollar Canada, and I like that trade. It's currently in the money. But this would be speculating on a short dollar Singapore. So I don't see the dollar weakness in other currency pairs really. And also, one could argue we have a pattern of higher lows in place, right? This low is higher than this low is higher than this one, and price is above the 50-cent moving average. So there's a little bit of mixed price action here on dollar Singapore. That combined with the fact that I'm not seeing dollar weakness on other pairs leads me to pass on this otherwise nice setup to go short dollar Singapore. So that is about it for the news and analysis today. No real the one adjustment to my trading is moving my stop to break even on my dollar Canada short or on my dollar Canada long trade. And of course, we observed those two major news events: Europeans potentially being banned from buying Russian government bonds, as well as the introduction of a 50-year Spanish government bond. Any questions you have, anything you want to add, join us at InformedTrades.com. Best of luck in your trading, and we'll see you tomorrow. Take care.